I'm Taylor Riggs in San Francisco in for Emily Chang, and this is Bloomberg Technology. Coming up in the next hour, the United Nations links Saudi Crown Prince Mohammed bin Salman to the 2018 hacking of Amazon CEO Jeff Bezos' phone. We'll have details and calls for an investigation. Plus, smaller and cheaper. Apple suppliers will start assembling a new low-cost iPhone next month. We'll bring you the latest. And chipmaker Bellwether, Texas Instruments out with earnings, looks like a beat on the top and the bottom line. Better guidance as well. Shares rising and post-market trading extending record highs. But first, our top story. United Nations experts are calling for an investigation into allegations that the Saudi Crown Prince, Mohammed bin Salman, was involved in the hacking of the cell phone of Amazon CEO Jeff Bezos. Officials say information now suggests that Bezos' phone was hacked following a WhatsApp exchange with the Crown Prince. Saudi Arabia's finance minister spoke exclusively with Bloomberg on the sidelines of the World Economic Forum in Davos.
I think the embassy in Washington, Saudi embassy in Washington, issued a statement last night or early this morning saying clearly that this is absurd. They called for an open investigation so that people know what happened.
A report by UN experts says the alleged hack may have been an effort to influence or even silence the reporting of the Washington Post, which Bezos owns. To discuss in Washington, we're joined by Bloomberg's Eliza Sebanius. Eliza, what are some of the political ramifications that you see from all of this?
Speaking to sources today, what I've been hearing is this call for understanding what actually went on. Even as these reports have been coming out about a digital forensic analysis and the UN released a report detailing how this hack occurred, there still seems to be some ambiguity. So, for example, many think that it was perhaps certain spyware that was used and was put onto the phone of Jeff Bezos via a WhatsApp message that contained an MP4 video. However, until we further understand if this was spyware, it remains to be seen, whether there will be calls to try to regulate the sale of those kinds of tools, whether there will be calls to make sure that this kind of thing can't happen simply by sending a video over WhatsApp.
Lisa, how sophisticated is Saudi Arabia in their hacking efforts, in their cyber warfare, shall we say?
I think this is an example of, the way that nation states can use cyber tools to really try to exert influence where maybe they're not going to use a conventional tool to try to silence Washington Post coverage of Saudi Arabia. That's not the kind of thing that a conventional tool of statecraft can accomplish. So this really shows the way that cyber has been increasingly used by states in recent years to try to exert influence in ways that weren't previously possible.
And Elisa, as we try to analyze some of the security measures taken on by some of these technologies as well, in your broad reporting of cybersecurity, how do companies like an Amazon, like a WhatsApp, also try to protect themselves from this type of attack, for lack of a better word?
So I think really understanding what is in this digital forensic analysis, doing follow-up, seeing, what needed to happen in order for this video to be sent to Bezos by the account of the Saudi Crown Prince and then result in the hacking and surveillance, which is looking likely, of his phone. So really understanding how this came about and then, implementing security measures that will prevent it from happening in the future will be key in the coming weeks and months.
Bloomberg's Eliza Sebanius, thank you for joining us. Now, Bloomberg has also learned that Apple suppliers will start assembling a low-cost iPhone next month. The company is expected to officially unveil the device as early as March. It will look similar to the iPhone 8 from 2017. Apple wants to address a larger portion of the smartphone market before it rolls out 5G phones later this year. To discuss, we're joined by Bloomberg Technology's Marc Gurman. Marc, what do we know about the biggest differences now between the high-end and now a lower-end iPhone?
Yeah, so Apple's continuing their strategy of retaining older iPhone designs and bringing the cost down over time. So like you said, they're going to be using a design from the iPhone 8 from 2017, which originated, a few years prior to that in 2014 with the iPhone 6. Now they're going to bring the cost down to about $400, but they're going to put some new technologies like some of the cameras and processors from more recent years. So what basically you're going to get is you're going to get an older iPhone that is faster than before. It's going to work longer. But I don't really think that it's going to do exactly what Apple thinks it's going to do. I don't think this is going to be sort of their savior in the emerging markets. I think you're going to need a sort of an iPhone 10 type design, much cheaper than the current model in order to do that.
Right. Who would buy it?
Yeah, I think it's people who have older iPhones, maybe something like the iPhone 3GS from about 11 years ago now that is still somehow working, to an iPhone 6 or 7 or 8 that doesn't want to shell out $600 to $1,000 for an iPhone 11 to an iPhone 11 Pro Max. They want something that is basically going to just allow their current version to keep working, right? So if you have an iPhone 8 today, you don't want to pay more than $400. You can get, a new iPhone 8 with a faster processor, the new software, and a tons of new features that they've added over the past few years for that much lower price. So I think it's going to be a really hot seller, particularly in the US, some of the more affluent parts of Europe and China, but not some of those developing markets in Eastern Europe and in India.
Well, one of the biggest risks is it starts to cannibalize sales of the higher end. So instead of going higher end, I buy this cheaper end model. Do you see that also as a risk?
Yeah, I don't think there's any chance of that happening. I mean, history has shown us that the iPhone users are going to tend to go to those higher end models regardless. Part of the reason why they're using that iPhone 8 design is in order to make them cheaper to manufacture. Obviously, as you know, the longer you produce a certain design or a certain technology, the better and cheaper it's going to get. This is a tried and true design that they've been using since 2014. It's going to be extremely low cost for them to build these things. So I think that a risk of cannibalization is extremely low.
But if we're waiting for 5G phones to come out in September, why come out with this now?
The people that are going to be buying this phone don't care about 5G. 5G is still in its infancy, and it's going to remain in its infancy at least for the next 2 or 3 years or so, particularly in the US. I know it's hotter so far in China, but for this particular phone, it's really not going to matter.
Bloomberg Technology's Marc Gurman, thank you for joining us. And we're also watching shares of Texas Instruments fluctuating between gains and losses in post-market trading. Texas Instruments reported better than expected revenue for the last quarter and better guidance for revenue in the current quarter. The CEO said most markets showed signs of stabilizing. The stock did close at a record high Wednesday just before earnings were released. We'll get more nuggets from the call later this hour. And coming up, now hiring. Chinese internet giant ByteDance wants a new CEO for its TikTok business. Among the requirements, must-love ads. We'll have all the details coming up. And later, Netflix's latest earnings report proves the streaming battle is heating up with no slowdown in sight. We'll get analyst insight. That's just ahead. This is Bloomberg. Chinese internet giant ByteDance is seeking a new CEO for its TikTok business. TikTok is a hugely popular video app that American politicians have targeted as a potential security threat. To discuss, we're joined by Bloomberg Technology's Kurt Wagner. So Kurt, point blank, why the new CEO, potential CEO?
Yeah, well, there's two big reasons. One is that TikTok is under a lot of regulatory pressure right now in the United States. Its ties, to China have led some to believe that maybe it's a security risk. And I think there's some who also think that having a larger presence on the ground here in the U.S. might help appease some regulators.
And what does that mean for the company? Because they talk about the technical, the product, the engineering still being based from a CEO in China, but this non-technical CEO to be in the U.S., I guess, sort of to help, the regulation part of all this.
Yeah, so the way that it was described to us is that it would this role would not necessarily be everything that you would think of as a usual CEO. This person would see more the business and operations side. So that might include, policy. That would include probably PR, marketing, but also advertising. And that's kind of the other big reason I was told that they want someone on the ground here is that when you're in Asia, it's hard to build a big business in the West from Asia. And so they want people on the ground who are going to be able to help, shepherd this potential advertising business through.
What What do we know about the advertising business so far?
Well, it's still growing, of course, but when you look at TikTok, hundreds of millions of users, it's really exploded in the US, especially over the last 18 months or so. And so there's a lot of people who believe it has a ton of potential. I don't think it's necessarily Facebook potential or Google potential, but certainly Snap potential, Twitter, that kind of thing. And so again, the US is the most valuable market for advertisers. Facebook has proven this quarter after quarter. There's a lot of people who believe that a service like TikTok could, make a big splash here. They want someone who can lead that.
We've been talking in the last few months about ByteDance, the owner of TikTok, potentially maybe spinning off or selling off a portion of TikTok in order to help improve relations with the U.S. How are those conversations going?
So we don't have an update from what we reported a few weeks back, which was that these discussions have happened internally. There is some, it's interesting with the CEO conversation is that could they put someone here that might, oversee TikTok were that ever to actually happen. Now, the company has said, ByteDance has said, this is not something they're discussing, but obviously Bloomberg has reported differently. And it does seem like a realistic possibility that if, regulators were to say, if you want to operate here, you have to totally disconnect from, your Chinese kind of bosses, maybe this new person would then take the reins.
The latest on TikTok and ByteDance, Bloomberg Technologies' Kurt Wagner, thank you for joining. And now Netflix reported its fourth quarter earnings Tuesday with overseas subscriber growth helping offset a slowdown at home. However, the streaming giant has not put in an all-time high on the share price since June of 2018. Come and take a look at this chart I'm showing in my terminal. It's unlikely to change anytime soon, given the stock's bearish set of lower highs and a sagging RSI. All of this suggests that Netflix's subscriber numbers could continue to disappoint, and it may stay far from a record high. With new services flooding in, what can we expect to see in the overall streaming landscape moving forward? To discuss, I want to bring in MoffettNathanson, Senior Research Analyst Craig Moffett. Craig, as you took a look at Netflix yesterday and you look out into your coverage of the streaming universe, what changed for you this week and as you look forward?
Well, I think yesterday's results from Netflix were a reminder that the U.S. is going to be a tough market because it's such a crowded market, right? Netflix had the landscape all to itself for an awfully long time. And there are some that would argue that that's good enough that its momentum will sustain itself without a problem. But I think you have to be at least a little bit cautious when you see the number of new services that are starting. And remember, a lot of that competition really wasn't even there during the most recent quarter. So we're still in the early stages of the ramp up. And by the way, it's not just that there is competition for the number for eyeballs and time spent. It's also that these new services are coming in at awfully low prices, and you have to at least be a bit cautious also about, well, what does that mean for ARPU for all of these services going forward?
Craig, like you said, it's early days, but in the horse race that is the streaming wars, who do you see emerging right now, at least as an early winner in this?
Well, look, my own concern is that there may not be a lot of winners, but I think on a relative basis, Disney's strategy of go big or go home, as my partner Michael Nathanson has called it, is very likely to mean that they are going to be one of the winners here. Again, at least relative winners here. They'll certainly get subscribers. You're seeing that already from all of the early data that they're getting rapid uptake of their service. Whether or not this can truly be profitable, and profitable on a scale where it starts to fill the gap that these services create for legacy media assets, though, is the real question. With Comcast Peacock, it's not just can you get people to watch it, and even can you get advertisers, but what do those economics look like when compared to the legacy of Comcast cable networks, or for HBO Max at AT&T? What does that look like relative to the legacy of the Turner cable networks inside AT&T? Those are hard problems to solve.
So, Craig, when you take a look at Comcast, AT&T, their HBO Max service, and the pricing models, you have some companies coming in at a low bar at $4.99, others a little bit more expensive, $13, $15 or so a month. Where do you see the pricing wars? What would be the right pricing strategy?
Well, right now, I think everybody is pricing probably below what is a sustainable number. So in the same way that you saw the virtual MVPDs, as they were called, the YouTube TV, Hulu, and so on, and at the time DirecTV now, came out at super low prices and then had to raise them and suffered real churn. I think that's a risk for this industry. I think there's a bigger issue here, though, that remember that Verizon is giving away Disney TV Plus for free. AT&T is going to be giving away HBO Max for free to at least some of its wireless customers. T-Mobile gives away Netflix for free. Those are just the wireless companies, and you're going to have other companies. Comcast is going to be making Peacock available to cable customers. There's a risk here that American consumers get trained to believe that the entertainment-like services, because all these are entertainment, not sports, but for the entertainment-like services, that the price that they should pay is something like zero. That's obviously troubling.
What about the difference between an ad-supported model or a more subscription-based model? What works?
Well, we haven't seen the ad-supported services yet to be able to judge very well, but remember what Comcast unveiled a week ago caps the advertising load at about 5 minutes per hour. So far less advertising than what you're used to seeing even in subscription-sponsored cable. So if you're going to be able to generate enough revenue to make that a really compelling business, you're going to have to get a big uplift in CPMs, or the price per thousand viewers that advertisers pay for. And that will depend on ultimately how good that advertising is at driving sales. And we just don't know yet. But they face an uphill challenge.
Well, the story continues with Craig Moffett of MoffettNathanson. Thank you for joining us. And coming up, a vehicle with no steering wheel or pedals. We'll take a look inside the Cruise Origin. Details from our interview with longtime auto executive Dan Ammann next. This is Bloomberg. Jumping on the self-driving car bandwagon alongside names like Waymo and Tesla is General Motors Cruise. But there's a catch. The new vehicle unveiled Tuesday has no steering wheel or pedals. With the all-electric Cruise Origin, CEO Dan Ammann wants to completely replace a conventional car. He spoke to Bloomberg's Ed Ludlow.
Our goal obviously is to make transportation safer for everybody, and the best way to do that is to remove the human out of the loop and to get the self-driving performance to a superhuman level of capability.
You talked about how this would be a more cost-effective solution for the consumer, even if they're a car owner or not a car owner. But who covers the shortfall? Because it's capital intensive building all these cars.
Right, but the thing, as I mentioned, is that this vehicle will run 24/7. It'll run all day and all night. It's got a useful life of well over 1 million miles. And so the utilization of that capital, that asset, if you like, is going to be extraordinarily high. And that's what allows us to deliver such a low-cost proposition to the consumer.
Some of your competitors here in California are also testing outside of the US, in China and in other parts of the world. Will we see Cruise Origin in China? What's your strategy for China?
So our strategy for Cruise Origin is for it to obviously to scale in the United States and to scale globally. Too soon to speculate on exactly on which markets and in what cadence, but our goal is to take this to very large scale.
How convinced are you that there is a near-term opportunity in California for this to be commercially viable?
Well, we know exactly what consumers have today, right? We know what your experience is today. We know what the cost of transportation is today. And as I said, our goal is very, very simple, which is to deliver a better experience at a lower cost than your other alternatives. And if we can do that, we think we'll have really high adoption.
When I talk to different market participants and analysts, they basically say the hardware's there, and you demoed some quite impressive hardware today. What they say is lacking is the software, the computing power to make this a convincing case. How do you assess your software relative to what else is out there?
You saw in the presentation tonight, Kyle talked about the performance of our software and the fact that we're now driving thousands of miles between any kind of incident through the streets of San Francisco. So in one of the most complex driving environments in the country, if not the world, we're driving thousands of miles flawlessly with our software.
And let's think lastly about the consumer experience. You discussed the app about essentially this is a ride-hailing service, but without a driver. You talked about the big picture cost saving, but what is an average fare that you expect to charge a customer for using Cruise Origin?
Obviously our objective is to deliver a better experience at a lower cost than what people are paying today. So it's hard to average or generalize, but if you think about what you'd pay today, our goal is to deliver something better than that.
That was Cruise CEO Dan Ammann. Now, the CEO of Google has left no doubt about how important he thinks artificial intelligence will be. Sundar Pichai says AI will be more profound than fire or electricity. In Davos, Pichai stated that current frameworks to regulate AI in the US and Europe are a great start.
I've said this before, AI is one of the most profound things we are working on as humanity. It's more profound than fire or electricity or any of the other bigger things we have worked on. It has tremendous positive sides to it, but it has real negative consequences. When you think about technologies like facial recognition, it can be used to benefit. It can be used to find missing people, but it can be used for mass surveillance. And as democratic countries with a shared set of values, we need to build on those values and make sure when we approach AI, we are doing it in a way that serves society. And that means making sure AI doesn't have bias, that we build and test it for safety. We make sure that there is human agency, that it's ultimately accountable to people. About 18 months ago, we published a set of principles under which we would develop AI as Google. Mm-hmm. But it's been very encouraging to see the European Commission has identified AI and sustainability as their top priorities. Mm-hmm. And US put out a set of principles last week, and be it the OECD or G20, they're talking about this, which I think is very, very encouraging. And I think we need a common framework by which we approach AI.
Are you satisfied with those frameworks you said, which have been developed until now? I mean, you referred to the OECD framework, G20 framework.
It's an early start.
Yeah.
But I'm very encouraged that they have a lot of commonality, and that's because they are rooted in common human values. So I think it's a great start, but we need to get more specific and evolve it significantly. I think the European Commission is working on a white paper around AI, and I think that's an important first step, and we all need to engage. As a company, we are committed to engaging in the process, but it's going to need everyone from around the world. AI is no different from climate. You can't get safety by just having one country or a set of countries working on it. You need a global framework to arrive at a safer world there.
That was Alphabet CEO Sundar Pichai. And coming up, it's considered a rival to Google. The search engine cloud company Yext talks rapid expansion both in the US and abroad. We head to Tokyo next. This is Bloomberg. This is Bloomberg Technology Global Link, where we join Bloomberg Daybreak Australia to bring you the latest in global tech news. I'm Taylor Riggs in San Francisco with Sherry On in New York and Heidi Stroud-Watts in Sydney. Let's take a look at the top global tech stories of the day. Heidi.
Taylor, WeWork has sold its minority stake in the female-focused co-working startup The Wing. As Bloomberg previously reported, the company had been exploring the sale since last year. The move is part of the parent company, WeCo's efforts to refocus on its main office-sharing business. In addition to The Wing, WeWork is in the process of divesting its stakes in other companies. Bloomberg has learnt that Xerox plans to seek control of HP's board. The personal computer maker has rejected Xerox's efforts to negotiate an acquisition. Xerox is expected to submit a majority slate of directors before Friday's deadline for nominations. Activist and shareholder Carl Icahn has pushed for a tie-up between the two companies. And Motorola will start selling its new $1,500 Razr phone in the coming weeks. That's after supply issues delayed the launch beyond the key holiday shopping period. The foldable Razr looks similar to the original model from the early 2000s, but runs Google's Android operating system and features touchscreens inside and out. And those are the top global tech stories that we're watching. Sherry.
Heidi, thank you. Let's head to Tokyo now, where web search company Yext is expanding, opening a new headquarters and hiring 100 new employees to accommodate its growth in Asia. The company aims to provide a more direct connection to brands and their customers. Joining us now from Tokyo is Yext founder and CEO Howard Lerman. Howard, great to have you with us. So, the Japanese business environment is pretty unique, isn't it? Especially the digital space. They use Yahoo Japan instead of most countries where we use Google. So why are you seeing more opportunities in Japan, and what's your strategy there?
Well, first off, Yahoo Japan's search is powered by Google. So there's a lot of facts that need to be online. And our mission at Yext is to put the truth online. I came to Japan yesterday, and I did a tour in the Fukushima region because many people around the world think that Fukushima foods and produce aren't safe to eat after the nuclear accident in 2011. This isn't true. But online, if you search for questions around Fukushima, you see a lot of pretty terrible things out there. I met with local farmers, I met with local sake producers, I was with the president of tourism. We can help put the truth online, and that's one of the reasons we've come to Japan.
Howard, on your website, you talk a lot about some of the big multinational companies you've been working with, but just there you mentioned some local sake producers. How are you going out, boots on the ground, and sort of helping some of the smaller, more local businesses?
Well, our focus, we're an enterprise business. We're software as a service in the cloud. Think Salesforce, think Adobe. But we can really help the tourism agencies of Japan, the governments of Japan, to put facts online. Anybody with an internet connection can write anything, which is one of the issues with the digital environment. What we've done is we've set out to put the truth online by putting brands in control of their facts. So, for example, when you look up a McDonald's or you look up a Yoshinoya here in Tokyo, the facts that you find in, say, Google Maps came from the brand itself. They're the authority on what time their stores open or what the address of their nearest location is.
Still, your sales seem to have been slowing, sales growth. So what's your strategy to counteract this?
Well, we've seen, I think, 30% growth since we've gone public. We are hiring 100 people in Japan over the next 5 years and are really excited to announce our new office here. 10,000 square feet in a beautiful new building, the tallest building in Japan. But the space we're in, Search Experience Cloud, it's a global opportunity. We've got offices from Berlin to Beijing to help multinational companies put the facts about them online. Traditional CMSs have unstructured content. What Yext does is we help companies structure their content so that search is using natural language processing, where a user asks a question and the computer can derive the intent from the question. We help that information be surfaced online so that a consumer gets the answer.
Howard, how much of your business has been able to benefit from the modern day when it's fake news, misinformation, disinformation, everything sort of being thrown around in the wild, wild west of the internet, with all of that sort of circulating around there with no regulator in sight? How much of your business can then go and take advantage of some of that?
Well, this all comes down to sourcing. 20 years ago, when you'd run a search, it was all document-based keyword search. You type in a keyword like McDonald's, you'd end up on a spot on a website with just the keyword McDonald's. But today, Google and other search engines can derive the intent of your query using NLP and actually give you the answer directly. So if you type McDonald's in today, you get maps back. If you type in how many calories are in a Big Mac, you get a direct answer. And so the consumer expectation has shifted, and it's up to brands to structure their data, to structure their information in a next generation website called a knowledge graph, so that they can answer these questions directly and get the misinformation out there.
Why would they choose your company instead of Google's business listings?
oh, well, our company integrates directly with Google's business listings. Our company integrates directly with Alexa. So companies put their facts in a knowledge graph that's powered by Yext. And then we link up to Google, to Alexa, to Facebook, to Microsoft, to all the other search engines, to Baidu in China, in Mandarin, so that when a user goes to look up a fact, the fact that they find came from the brand source itself. That's the authority on the matter. That's what Yext does. We help brands put the truth about them in Google, in Facebook, in Alexa, and on their own websites using the Search Experience Cloud, using our software as a service SaaS platform.
So, Howard, if you're working with Google, how wrapped up are you in, let's say, the U.S. environment where they're being scrutinized for antitrust, data privacy, all the works here?
Well, when you're looking online at, in Europe with GDPR, when you're looking at what's going on with cookies, that's all around personalization and individual consumer data. What Yext is doing is helping create a next generation content management system. And by definition, anything that a brand puts online, they're trying to have people find. And so those are all public facts. McDonald's wants people to know where their stores are. JP Morgan wants people to know where their bank branch locations are. Morgan Stanley wants people to know where their financial advisors are and what languages they speak and what services they offer. So we don't really worry too much about the privacy issues because we're trying to push the truth out there about public things that are already public.
So tell us a little bit about your financials, because they don't seem too attractive. When can we expect you to be profitable? And also your debt to equity ratio now at over 50%.
We're investing really heavily in growth. The space we're in, the Search Experience Cloud space, is part of the digital experience platform space, which is estimated to be more than a $20 billion market. We have a $20 billion TAM, and this is a winner-take-most market. We're investing heavily to grab market share in order to win big customers around the world, from Beijing to Berlin, before anybody else can get there. Because once a customer is on our platform and they begin to put their facts into the knowledge graph, and we're pushing all their facts into digital experiences for them around the world, it's really important that they stay there and we're able to build more applications on top of their platform. So we're investing for growth, and that's what we're seeing.
Okay, well, thank you to Yext founder and CEO Howard Lerman. Much more ahead, so stay with us. This is Bloomberg. Chip industry bellwether Texas Instruments out with fourth quarter earnings. Shares were fluctuating between gains and losses as investors digest better than expected first quarter guidance on revenue. But with the stock trading near record highs, it leaves little room for error. Just off the analyst call is Bloomberg Technology's Ian King, who joins us now. Key takeaway from the call.
Yeah, I mean, things are not getting worse, was the key takeaway. I mean, if you look at the percentage of declines in revenue over the last 5 or 6 quarters, the rate at which it's getting worse is abated, shall we say. So that was the key takeaway. The reason that the stock kind of popped initially and then sort of ended up slightly in negative territory was people were expecting a little bit more.
You also were talking with the CFO.
Yeah.
What are they saying?
Right. So the key thing sort of underneath here is that the overall forecast would actually have been a little bit better if it wasn't for one market, and that's the communications equipment market, selling into things like base stations for cell phones. That market, he said, is going down hard, not getting better, and therefore that's dragged down the overall forecast. More important to Texas Instruments, markets like automotive, markets like industrial, they're actually close to turning in positive, which again is very good for the overall economy and the company.
I want to dive down into these numbers just a bit. You jumping off the analyst call, you're here, like you said, revenue top line slowing, but slowing less than we thought it would.
Correct, yeah.
What's going on? Because we had so much optimism coming into this about the chip makers.
Right. I mean, what Texas Instruments said is normally when you get into a normal industry cycle, you have about 5 quarters of declines. We're past that point.
We're there.
And they've said that things were extended because people remain cautious because of the China trade dispute. China's obviously the largest market for chips. It's a big market for Texas Instruments. That is starting to show signs of improvement, so things aren't growing yet, but the rate at which they're getting worse is abated.
So talk to me about the exposure to China. If they're talking about macro headwinds, China trade tensions, we got the signing of phase one. How much of that headwind could now become a tailwind?
Yeah, again, it's complicated. What made communications equipment a year ago really good was Huawei went out there nervous that it was going to get blacklisted, nervous about the consequences, and bought a load of chips. This quarter, it's not doing that, so the comparisons are negative. So there are puts and takes on both sides of that. The overall, I think Texas Instruments was trying to say, look, this is also a macro sort of sentiment kind of thing. As long as people are less concerned that we're in this kind of death match sort of trade dispute with China, then there is hope that there will be a return to normalcy.
Talk to me about some of the different segments. You'd mentioned some communication equipment. Industrial makes up about 36% of revenue. Personal electronics, about 23%. You've automotive makes up 20%. So this really is a bellwether, given all the different ties to the industries. What can we take away from this about what's doing well and what's not?
Yeah, I mean, they got asked at length in various different ways to sort of give us a hint about some markets that are going well, some markets that aren't. And they just don't do that these days, apart from on the levels that you talked about. If you look at automotive, you look at industrial, they were down in the low single-digit, sort of mid-single-digit percentages, which is considerably better than the amount of declines that we had expected in the fourth quarter. And therefore, so that's negative is being taken as a positive.
So then what the heck is going on with the share price? Because you're closing at record highs despite some of the consecutive revenue declines that you and I've talked about.
Yeah, no, I mean, this is the chip industry, right? You have to try and anticipate those swings. That's what's been going on. A lot of money has been put to work in chip stocks. I was talking to an investor in the aftermath, and he was saying, look, yeah, we've already priced in the cycle turning. Now we need them to start to show really strong growth before we'll put more money to work, so we'll see.
So Ian, you talk about a lot being priced in. I want to come and take a look at a chart here that I'm showing inside my terminal. Basic forward PE ratio of the stocks trading at more than 20 times relative to the S&P, only 18.7. Only 18.7 times. Valuations are full, highest in a decade. We have no margin for error in these next earnings reports, do we?
No, I think that's a very good way to look at it. I mean, it's these companies are not cheap on that basis, right? If that's what you're looking at, we've already reached the point where there was value to be had there, where you could buy at the bottom. I mean, there are only a very select few companies that are below that point.
Well, I guess purchasing my TA 22+ calculator didn't seem to help much this quarter. Thank you. That was Bloomberg Technology's Ian King. Now, in the latest episode of the David Rubenstein Show, Peer-to-Peer Conversations, Salesforce founder, chairman, and co-CEO Marc Benioff sits down to talk about his commitment to philanthropy and how his relationship with Apple founder Steve Jobs shaped his company early on. He also criticizes Facebook and comments on if he would ever seek office to implement change.
Facebook is the new cigarettes. It is bad for you. It is addictive. They do advertising that's not true. There is, they should be regulated very aggressively.
Have you heard from Mark Zuckerberg about your
Sure,
statement?
I've talked to him, I've talked to his management team, and what I say is, trust has to be your highest priority. If trust is not your highest priority, and if you're not thinking about all your stakeholders, and you're only focused on money, then what kind of business are you building? Now, they agree, for example, that pornography should not be on their site. So they have built the technology, and it cleanses their site of pornography. They're very careful about that. They have AI, it's advanced. But there's other things that they allow, and where they could look for truth, where they could actually work to have great integrity, and make sure that everything is accurate and clear. They don't do that. And that, I think, is a problem, and that it needs to be directly addressed.
As a result of your success at Salesforce and other things, you've obviously made a fair amount of money. Is your goal in the future to make more money, to give it away? Would you consider running for office?
Would never be a politician. I will never run for office. I wouldn't know how to run for office. I don't think I could not see how I could do that. I like to go to Hawaii, like where Steve is, enjoy myself. That doesn't really work with that model. You know, I think that business is the greatest platform for change. I think that what I'm doing, I can have more impact doing what I'm doing with 45,000 employees and all my partners and my trailblazers all over the world and say, we can do it. We can change the world. Oh, because by the way, if you and I don't change the world, no one else is going to. You know, we have to repair the world. We have to improve the world. You know, we're on the board of the World Economic Forum together. We're trustees of the World Economic Forum. You know, our tagline is committed to improving the state of the world. Isn't that everyone's tagline? That's why we're here. That's why we're on this planet, is to improve the state of the world. We're not here just to make money. We're not just here to manipulate other people or to get our way. We're here to improve the world and to love each other. And that's what it's all about.
That was Salesforce CEO Marc Benioff. You can check out the full episode of The David Rubenstein Show Peer-to-Peer Conversations Wednesday, 9 p.m. Eastern. And still ahead, Elon Musk has plenty to dance about. More on the electric car maker's new milestone next. This is Bloomberg. The U.S. and France have struck a deal on a global framework for digital taxation that averts a transatlantic trade war. France agreed to delay collecting a tax on multinational digital companies until the end of 2020. In exchange, the U.S. will refrain from imposing punitive tariffs on French goods. Earlier, we spoke to French Finance Minister Bruno Le Maire.
We are ready to postpone the prepayment of April and November till the end of the year, with the view of finding an international solution. And if there is an international solution at the end of 2020, in that case, we would get rid of the national taxation and replace the national taxation by the international solution.
The U.S. had threatened to slap tariffs on French wine, cheese, and other products if the French went ahead with the digital tax. Now, Elon Musk is having a good day. Tesla's market value surpassing more than $100 billion Wednesday, surging past Volkswagen to become the world's second most valuable automaker. The Tesla CEO can look forward to a huge payout if the stock sustains its rally. Here with more on Tesla's remarkable run is Bloomberg's Dana Hull. Dana, come into my terminal here, GTV Go, $102.7 billion. You're eclipsing Volkswagen. You're eclipsing that of both GM and Ford combined. You're only trailing Toyota. How did this happen?
I know it's been remarkable how fast it's happened. I mean, just 2 weeks ago, the market value was like 88 million, and we wrote a story that said that his payout no longer looked crazy, and then 2 weeks later, he's totally like it's in his sights. So it's been pretty amazing.
Explain the payout to me, because this isn't just a one-time. It has to be sustained on an average, right, or a rolling basis.
Yeah, 6 month trailing average, 30-day something, which I should know more about. But yeah, it's not just like a one-time thing. Right. But now that they've hit it, if they can sustain it, he will get that payout.
How do the shorts feel?
Well, the shorts are being crushed right now. I mean, they lost over $2 billion in 2019, and they've already lost that same amount just in January of 2020. But remarkably, they're not like folding. I mean, Tesla is still one of the biggest shorts that's out there. So, and if anything, a lot of them are doubling down.
Dan, we look ahead to earnings on the 29th. The big surge in the stock has been fueled by the big growth in China. They've managed to roll out that Shanghai factory with limited what's that word?
Production.
Really good production, but limited hiccups, so to speak. How much of all of this is really based on China?
Well, I think the run-up in the stock is due to three things. One, they reported a profit in the third quarter. Their deliveries for the fourth quarter were very strong, and then this China plant is sort of up and running faster than anyone expected. But going forward, there's still a lot of other potential catalysts. The Model Y is their next car. You're seeing like pictures of the Model Y all over the Bay Area, like spy shots. Like there's this feeling that like Tesla could pop the Model Y out sooner than expected.
So talk to me about that, because Elon Musk, I believe on a video, said that the Model Y could eclipse all of the demand of some of the other vehicles combined. We were speaking with analysts, and they say that maybe he likes to say that, but they're not sure that Model Y, that kind of demand, is really there. What are you hearing?
Well, the truth is that the whole auto market is shifting from sedans to SUVs. And Tesla made the Model S, and then they made the Model Y. The Model Y was a little bit of a disaster. There were a lot of issues with the Falcon Wing doors. People who buy the Model Y seem to like it, but the Model Y never sold in super high volumes. But I mean, the Model X never sold in super high volumes, but the Model Y could be Tesla's opportunity to kind of fix that and remedy that.
Any downside to this stock is all surrounded by that demand question. Is the demand truly there, enough of it in the coming years to come globally?
Well, that's the big question, because Musk himself in July on the earnings call warned that the first quarter would be pretty rough. And, you know, there's seasonal issues in that a lot of people don't buy cars in the winter. And so, I mean, he sort of said that he doesn't expect the first quarter to be very strong, but is it going to fall off a cliff? I mean, that's sort of what happened at the beginning of 2019, which is why this year started with the stock so underwater.
Who do you see as the biggest competitor? You know, is it an old GM Ford coming out with an EV or a new startup we haven't heard about?
You know, I don't think that, I mean, I think that Tesla has such a brand awareness. When people don't say, I really want to buy an electric vehicle. They say, I want to buy a Tesla. And even though we've heard about all of the competition coming, no other brand has kind of solidified its place in the market in the way that Tesla has. So I'm hard pressed to say that there's like a strong competitor at this moment.
Yeah, wonderful. Bloomberg's Dana Hull, thank you for joining. And that does it for this edition of Bloomberg Technology and Bloomberg Technology's live streaming on Twitter. Check us out at Technology. Be sure to follow our global breaking news network at Quick Take on Twitter. This is Bloomberg.